So this is the second year I participated in Aptos Experience. Last year was in Seoul, actually. And I had the honor to chair a panel, moderated panel rather. Topic was in APAC, investment potential and adoption. But this year is already on the exit. So I guess that shows how fast our industry and also Aptos ecosystem has evolved over the year. Imagine, I slept for a year and wake up now, and what has transpired in the past 12 months also is that we see more and more so-called crypto firms, crypto projects adopting capital market strategies, be it DATs or de-SPACs, or even some project pre-TGE already started deployment of their DAT strategy, right? And on the flip side, more and more RWA projects, we see more tokenization of, real-world asset, be it stablecoin or more exotic funds or equities, brought that on-chain, right? So there's a lot of crossovers which made us, want to take a pause and reflect what has really transpired in recent months. So today we have excellent panel and representing different aspects of the ecosystem. I will let our honored panelists introduce themselves, and then we're going to start, our discussions around this topic. So, Claire.
Thanks, Jeff. My name is Claire. I'm the co-founder and CEO of Hyperion. What we do at Hyperion is building a liquidity and trading layer built on top of Aptos. We started out of the Aptos Anchor Accelerator program last year, and since then we complete strategic funding led by OKX Ventures, and with participation from Aptos Labs, Mirana Ventures, and Maelstrom. And we launched our mainnet this year in February and has become the largest DEX on Aptos ecosystem. We have reached a TVL of over 100 million and with accumulated trading volume of over 16 billion. It's a pleasure to be here, and it's my first Aptos experience, so very nice to meet everyone.
Thank you. This is Baek with Hash. Hash is early stage venture. We've been backing the pioneering founders in the industry for about 8 years. We're a proud investor of Aptos since day one. We've been working closely with the team around the globe with the go-to-market. We have hub offices in San Francisco, Seoul, Singapore, and Abu Dhabi. Happy to join the Aptos experience here today.
And hello, everyone. My name is Ryan David Williams. I'm the founding partner of Ashbury Legal. We're a crypto-focused boutique law firm based in San Francisco. Been working exclusively in crypto for the last 10 years now. Initially, my career started here on Wall Street as a capital markets attorney. So this panel kind of represents a full circle moment for me with my old life kind of colliding with my new life. So looking forward to talking through that with you all today.
Excellent. So it sounds like we have all the active stakeholders in the crypto ecosystem. We have founder, we have investor, we have our partners from professional service side. And so maybe I start with Claire. So Claire, would you mind sharing with us your experience of doing your TGE and and the post listing, and what you have seen, how the community responded to your liquidity event, and what has been your experience and the efforts, I guess, or lesson learned in this whole process. Yeah.
So I will share something from a builder perspective. At Hyperion, we just completed our TGE 2 months ago. I remember the exact date was happening on July of 16th. So we were the first Binance Alpha bonding curve IDO. So it was actually a new mechanism that we work with Binance Wallet and also Formeme Launchpad to do the IDO. And the mechanism implements a mechanism called bonding curve. And we actually, before that, we start preparing everything and work with all the teams along the way to be able to complete that successfully. And if you keep attention to the bonding curve and how it went, you will see that our IDO complete a sale within 10 minutes after it starts. So it was quite a critical moment for us to launch our TGE, and also it was a successful launch for our community members, where we have our community members and also all the early adopters participate in that. And also it acted as a powerful user acquisition and also growth bootstrapping tool for us. So we are very lucky that we build on Aptos ecosystem, and also we are very lucky to get into the LFM program, which is like a TGE supporting studio that Aptos Foundation launched. So we're one of the last projects got into that batch, and Aptos Foundation has provided with us tremendous support, especially for like projects teams like us who doesn't have any experience on token launch or CEX negotiation or even like a market making, etc. So I think building on Aptos is definitely a right choice for us to start with. And also the support and also the assistance from the foundation has been tremendously helpful for us to complete the TG along the way.
Excellent. So if memory serves, Hyperion is one of the first projects on Alpha, right?
The bonding curve IDO, yeah.
The first,
Alpha.
right?
Yeah, the first one.
Okay. So it's I wouldn't say anti-intuitive, but it's not a common knowledge that usually when it comes to TGE, it's always projects dealing with the platform, right? Be it the CEX or DEX or so on and so forth. But in your case, Foundation actually provided tremendous support. Would you mind like articulating this more? Not to kissing ass to Aptos in this venue, but we want I guess the friends here to actually appreciate the fact that it's a collective community effort to make a TGE successful.
I've also shared our experience with a lot of builders and other co-founders as well about the experience. And I think the support from the foundation also is part of why we joined the LFM program, and including the marketing, tokenomics design, and also the security, which is, I think, the most important thing for a lot of protocols right now. And the foundation has provided us with the connections with different top-tier auditors. So we complete a very extensive auditing before the TGE along all our code base, and we involved one of the top-tier auditors to help us with that. And in terms of the marketing, of course, Aptos has extensive experience on marketing. But for us, because we are an Asian-based team, we don't have much exposure with the Western world, especially the KOLs and the media resources along that way. So Aptos has been providing us with all the connections and help us to bootstrap the initial growth and also the marketing exposure connecting with the Western world. And the last part is the market making. So we are our team is more technical focused. My co-founder, he's actually 4 years Move developers. So he's been in this Move developer community before Aptos launched the mainnet. So it's super, I have to say, very geek. And we don't have much experience on the market making or liquidity, but we are able to manage to launch our token simultaneously on both DEX, which is Hyperion, and also on CEX, including Binance Alpha and Big Ed and also Gate, etc. So I think Having TGE and also having launching your TGE successfully requires all-round techniques and also knowledge. A lot of protocols don't have that mindset or experience to manage everything. So that's why I think having a solid and trustable partner to guide you through the way is very, very important for you to complete that TGE.
Great. Credit all goes to Aptos, guys. A round of applause to them. So, Baek, let me make a wild guess. You must have hundreds of portfolio that has gone TGE or down the path of exit. So, what have you seen in the past? Call it 6 months, when Binance obviously push forward Alpha Launchpad, and there are also different launching platforms all around. What would be your best advice to your projects or to your portfolio right now when it comes to make a decision on the CEX, TGE on CEX or on DEX or on these more innovative platforms?
Yeah, my best advice has been it depends. Because the market condition this year has been changing so dramatically, almost every other week in a way. Whether that's coming from macro or from regulation or from the president or the tariff war and all these things going on. So, what we actually suggest to our portfolio is actually not really a golden formula of going into TGE or getting listed and growing from there, but is training and getting ready the team to be adaptable and move fast with the changing market condition. So the only constant parameter here is the changing environment. A lot of times, I think this year, as you mentioned, Binance has been pushing that alpha program. So we noticed that even the larger size of a projects has been pushed into the alpha program. And then when they get the certain volume or the interest, they go into spot. We've been seeing also interesting kind of changes globally, such as Korea. Upbit has been more aggressively listing in the past few weeks compared to how they've been behaving in the past year or so. So it just changes quickly, and it's something that founders cannot really control, and also really cannot coordinate in terms of timeline as much as they want to be. So right now, with our portfolios, we have about 10 or so portfolios that are getting ready to TGE in the next 12 months cycle. And what we say is that just get ready with any kind of situation and get ready for any moment of a TGE and a listing. So what I actually noticed with a lot of the first-time crypto founder and the mistakes that they make is that because they come from usually tech or product backgrounds, their timeline of TGE become a bit more like a technical milestone timeline. What I mean by that is by the time they're done building, they want to go TGE and go listed and so on. But when you look at the traditional finance, how the companies go public is a very different way around. It's more of you're ready with product, you're ready with revenue, you're ready with customer, but you're eyeing on the market to see the best outcome for shareholders and the market conditions, and also for the potential future investor, right? So in crypto, I think that control of eyeing on what time to go TGE is still very hard for founder side to have that visibility and bit of a expectation on how the market will perform. So I'll say it's still one of the challenging and also most important part of the founder journey in the market. Unfortunately, is where we are in the market, I say.
Thank you, Baek. Ryan, now question to you. I think we're in the U.S. and the U.S. has been the beacon or the lighthouse for the regulation or deregulation as the turn comes, right? So what's your thought or the best advice to the founders or project or investors alike when it comes to the market exit, right? Be it the Wall Street, again, the tier ones, crypto exchanges, so on and so forth. And I think we chat about this. Last year, I was at a similar kind of an event. I think a former SEC attorney give the best advice to the founders is get out of the US, right? So right now, I'm not sure whether that's still your advice or the other way around. So, and how you're going to evaluate, the legal risks or the repercussions around that.
Yeah, I think there's two parts to what you asked, right? One is kind of how do we think about and advise about exit opportunities and how we're structuring these projects, and the other is the wild ride that has been U.S. regulation, deregulation. What does it actually mean? So on the first point, because we're talking about tokens or IPOs, and there's a lot of talk about DATs, like, as the lawyer, I usually say it depends. So I'm going to go with kind of Baek's point here, but not focus on market timing, more about whether equity or token is the right value accrual mechanism for a particular project depends on that project. And so, you got to think about how value is going to accrue in your particular ecosystem, what the actual value proposition is for the token, for equity investors. For example, if you're an IP-heavy Web3 gaming development company trying to put together a AAA kind of gaming studio, equity is probably a pretty important vehicle if you're thinking about acquisitions one day, right? And so saying, hey, go offshore, do a foundation with no owners, no stockholders, launch a token, decentralize, like, what does that mean? And we've seen a lot of projects come back to us and say, hey, I was kind of pushed down this path here, and now I want to sell to Disney or Activision or Blizzard, and I don't know what that looks like, right? So I think people, on the other hand, if you're a DeFi protocol, and you have 3 smart contracts with a few parameters that can be changed with on-chain governance, and network effect as opposed to intellectual property is your primary value accrual mechanism, tokenization makes a lot more sense. And so I would say don't think about the exit opportunity as how you design your value accrual mechanism. Think about your product, your business model, and kind of how value is going to accrue to the various instruments you use. Now, on the US point of this, I think it's certainly a great time to be building in the US. It's been a difficult time for the last several years. That said, I do think some of the changes have been a little overstated, right? In terms of, for a while it was, hey, every project has to go offshore and do some ownerless foundation. I thought that was overstated at the time. I think it works for some projects, but doesn't work for others. Similarly, I think the mantra now is the foundation is dead, and there's no need to go offshore, right? And I just think the answer's always been more nuanced, and again, project by project. And so, I'll give you just one example. If you're a non-US project and you are controlled by non-US taxpayers, building offshore has some really beneficial tax advantages, right? You could be in an offshore or kind of tax-neutral jurisdiction like a BVI, Cayman, or Panama. It makes a lot of sense. If you're a US-centric project and it's going to be controlled by US taxpayers, you don't get those benefits. So that savings is gone. The calculus is totally different. And so what I say to people building from the US is crypto is hard enough. I think Claire can tell you that, right? And building in this space is difficult. Where you can keep it simple, try to do so. And so with this new regulatory climate, right, I do think US founders should look to build in the US first, but then look for signals that maybe there is a role for an offshore entity if you need it, but you should be really clear about what risks are created by the system you're building and how, and to the extent, going offshore actually mitigates those risks, and be thoughtful about that before you take on the added cost and complexity of managing a labs co plus a foundation company structure. It's a lot to do and may not be bringing you the advantages that you actually think it does.
Excellent. I think both Baek and Ryan talk about depends, and Ryan also say keep things simple. I myself didn't take that lightly, because what that really means is that nowadays the founders, the investors do have the choice. Right? It's not that if you do certain things, that's the only playbook you have to go down, be it the market readiness or the regulatory environment. So I think to a certain extent, we're very fortunate standing here in 2025 with all the optionalities in front of us. Now, someone in the audience that have been talking to me for longest time today very happily approached me that they finally got some endorsement from their partner on their RWA project, right? And so finally they can do a token wrapped up, on some traditional commodity with one of the largest trading firm out there. Now, my feedback to that is that, okay, sounds good, we can do the token issuance and all that, but is the system ready? Do you have a platform? Do you have a marketplace for a token? Do you have the necessary kind of service providers like transfer agent, liquidity provider, so on and so forth, right? So I guess this time probably start with Ryan, you first. What do you think of the market readiness, be it the TradFi, the traditional capital market, welcoming the crypto project, right? Either the service providers or the DATs or the SPACs that are having all these utility tokens as their main asset. How ready they are, or how ready the whole crypto system, right? DeFi, CX, so on and so forth, are ready to do all these so-called RWA stuff, right? I guess you probably can contribute for your observation of the market, also from legal perspective, then we can get the perspective from the other panelists.
Yeah, I think I'll start with just kind of tokenization of securities, right? That's a big topic right now in the RWA space. We've seen Robinhood move into that direction. Ondo, a client of ours, is moving in that direction. And there's, I think, two ways to think about tokenized securities. Are we talking about tokens that themselves are securities because they have some inherent financial feature to them, like a dividend payout, for example? Or are we talking about the tokenization of traditional equity securities, right? And those are kind of two very different things. And there's been a lot of excitement about tokenized securities, and we see DTCC start to move into that space, NASDAQ starting to play in that space. I think the challenge that we still have is some of these downstream implications. Like Delaware, where a majority of these startups are based, at least in the US, has allowed for tokenization of its equity securities for like 8 years now. Doing that is easy. The challenge then becomes the downstream implications of this, and like, where do these trade, right? Coinbase is they're not licensed currently, at least, to trade in tokenized shares of equity securities, right? Market makers aren't licensed currently to make a market in these securities. Broker dealers, you need registration with the SEC to handle these. And so I think it's a great starting point, but I do think there's a significant amount of infrastructure that needs to be built out and will be built out. It is happening. We're just at the very, very early days of that process.
But you remain positive about.
I think it's inevitable.
Okay.
I think it's inevitable that that tokens, or sorry, that equity securities will be tokenized. The history of kind of financial paper is that it gets lighter and faster and cheaper to move around, right? I mean, when I first started my career in capital markets, every settlement was T+3, right? So you'd trade in a share and you'd get the money in your brokerage account 3 days later. Now it's T+1, so it's been faster, but it's still not instantaneous, right? But like, it's never going T+5. We're not going backwards. We're going in one direction and one direction only, and tokenization is going to support that once we build kind of the infrastructure around it.
Thank you.
For me, I know your question was a bit more on the kind of systemic structure of the market, on how it's ready. But as an investor, just focusing a bit more on kind of the crypto founders and the crypto community, I think one thing that crypto industry has been doing really well is supplying things that market isn't sure if they need yet. I think it started with ICOs, ICO of decentralized computes, right? Like, I'm talking about like 17, 18 white paper. Like, we were going to provide compute through incentives, but then we couldn't find demand for those compute for a very long time. Now it's quite different with AI. And I think same thing with tokenization too, right? It used to be called STO. We wanted to tokenize all the things and supply it through on-chain token, but then no one really wanted it or didn't really see the value. So I think this industry just keeps trying and is very persistent with very large amount of capital to just kind of supply, keep trying different angles. And I think that's how the innovation also happens, right? But as an investor working at Founder, the challenge has been not so much about market readiness, but it's all actually lack of talent within the industry on gouging the demand of these products or systems or even your own protocol's token. Like when founders go to token TGE or I guess like a DAT or such, it's really hard for them to really gauge the interest or the demand. Oftentimes, as I described before in the panel, many of them just go into the TGE through their own product milestone. When they get to the finish line of mainnet, they launch token. They say, we have this much Twitter follower, this much kind of Discord, this much this. Maybe we will get to this kind of range of valuation and such. So it's very kind of not coherent, I would say, or systemic in a way. So if we keep doing this and expecting market to be ready for creating demand or accepting these, whether that's regulatory way or just crypto native way, it's gonna have challenges. So that's kind of the biggest gap that I see usually. And the other part, focusing a bit more on founder, since we have a lot of builders here today, capital can grow exponentially in a J-curve, but usually humans cannot really grow exponentially. We grow in a more, I guess, step by step, linearly, through school, through work, and I think first time in human history, crypto founders going through where they have so much, like such a short time of a time spent to grow as an even first-time founder, and then they go IPO as in token TGE, and their assets are growing. Let's say the market's good, their token does really well, they get to billion FTV, for example. The founder is not really billion-dollar founder yet. Yeah, you might have gotten that way, but the way that you operate internally, the way you work with the market, design the market system, it's not there yet. And that's why I think we see a lot of time this kind of bell curve of a market coming down because it was overshoot or the market just didn't have that much demand. So, as an investor, I try to kind of focus this question a bit more on kind of founder readiness and getting the protocols to be a bit more systemic on getting towards this token TGE IPOs or CEX listing and so on.
Got it. So Claire, love to have your input. Are you ready to be that billion-dollar founder that Baek just alluded to?
So for me, I actually believe in the spirit of going public is going on-chain. So I believe that in 5 years, going public means that launching your a token in a suite of decentralized venues, whether it's DEXs or other platforms. So I truly believe in the on-chain spirit. And also I think compared to the traditional way of the equity, launching on-chain has its advantage. So it's not just for the liquidity. Of course, the traditional markets has tremendous liquidity, more than the crypto markets. I think it's more for a programmable alignment. So for example, for Hyperion, our token can allow a trader in Seoul, a liquidity provider in Lisbon, and also a developer in Aptos ecosystem, all to be economically aligned with the success of Hyperion. I think that is something that equity cannot do that. So we believe in the spirit of on-chain, and we can use our token to incentivize our users, including the traders, liquidity providers. We can use our token as the governance tool, and everything will be bring all our users and also community members globally into one aligned group. So I think that's something the equity markets cannot do in the short period of time. And of course, I think there is a downside to that is there has a tremendous operational cost because crypto markets operate 24/7, and especially for the governance part, I'm sure that if you guys participate in any on-chain governance, you will see all the proposals, debates, and the votes, and but I think it's actually a beautiful chaos, but it's just a big cost that maybe the traditional or the equity co-founders doesn't have to face.
Yeah, very, very well said. I think that deserves another round of applause. I think TGE probably, as Claire just mentioned, is not just the liquidity event. It's really, providing the access, fully utilize or unleash the utility purpose of the tokens, right? Democratize the access, so on and so forth. I think a lot of efforts on the capital market side is also to serve that purpose to a certain extent, so that regular or TradFi investors could have access to the crypto that otherwise might be a little bit hard for them to cross that hurdle to hold and trade. Now, we only have a few minutes left. Right now the on-chain infrastructure is so ready that it's so easy for people to throw on the meme assets and all these other things. On the other side, other hand, the capital markets, I think there has been some deal fatigue when it comes to the DATs and all these structured deals, and you see the MNAV going down even to the negative side. So what would be your short suggestion or observation, or the forecast, or the best wishes that you would want to say, right now in October 2025, thinking of how things are going to unfold in the next 12 months or so when it comes to moving crossing TradFi and the crypto communities. I don't even know which direction I should emphasize on, but what would be your statement? Crossing these two spaces, I guess.
For me, I think so. There has been like a motto or a vision on Aptos, say that money moves faster on Aptos. So, like Jeff said, the DATs and also the RWA assets, and also recently, I think the tokenized stocks has been really popular. Hyperion is a trading platform, so we want to facilitate like everything. Trading on-chain or on Aptos, and not just the RWAs, but also other assets that doesn't have enough efficiency in the real world, but we can move them and tokenize that and bring them to trading to the crypto markets and provide 24/7 markets on that. So I think some people asked me about like the crypto markets versus Nasdaq. I think eventually crypto markets will surpass Nasdaq, not just because the 24/7, but also because the efficiency and also the reduction of the middle cost. And I think I will use that motto to conclude this, which is the money moves faster on blockchain.
Yeah, I think those are great points, and I guess points specifically around like DAT. Just like what I said before, I think there's just oversupply by crypto founders on DAT products without accurate gauging of demand, which is causing this fatigue from the Wall Street and the traditional finance side. But as Claire said, and as an investor too, we're seeing that the crypto industry is kind of breaking out of a bubble. When I say bubble, not the price, but its own bubble, that it's actually interacting with the traditional market in a way more dynamic way than any other years before. So what I notice is the founders and investors are spending way more time paying attention and working and also understanding the macro and the general traditional market side on how it impacts each other. Whereas before, I think it was very much thesis driven within the industry on what's cool, what's needed, what needs to be built, what's the gap, what's inefficient. But I think we built most of those things, and we're ready to take it to the world beyond crypto, and we're having that kind of a friction this year with a lot of the turbulent changes in the market.
Yeah, and I'll be quick. I think my hope and prediction for the next 12 months at this intersection is that DATs go away. And not because there's anything inherently wrong with them, but because I think they exist currently to solve certain problems that I hope and I expect will go away. So for example, very difficult to hold crypto in retirement accounts right now. A little easier to do that if you have a DAT. Certain institutional investors are unable to hold certain small cap or altcoins directly. A little easier to do that through a DAT. And so I think the DAT is kind of this vehicle to connect crypto and TradFi, because there are still challenges in doing so and a lack of certain regulatory clarity and just slower institutional adoption. I think as we get things like crypto in your 401k, as we get things like institutional investors getting comfortable directly holding these assets in like a self-custodial way or through a qualified custodian, I think the need for DATs will go away, and I think that will be a positive, not negative development for the intersection of crypto and TradFi.
Well, I like that. And don't forget, there's a wallet, and there's a firm that offers the best wallet in the market. So, okay, that's enough time for this panel, and thank you, my fellow panelists, and thank you, the audience.